Welcome back to Crown's Crypto Cave. My name's Crown, and I want to wish everyone a happy Saturday morning, wherever you might be in this world. I've had tons of coffee, and I'm ready to do a little bit of a long-term analysis as we have an extremely important daily that occurred yesterday. So with that, I wanted to follow up some of these more long-term analysis videos I've been doing for the last few weeks and talk about why this is so significant with the way that we close this daily right here in essentially a major bearish engulfing candlestick right there, right, taking us right below that 100 exponential. So I'm going to put on my trend lines really quickly, and I'm going to talk about what exactly we have not confirmed by not confirming that candle above this 7,500 resistance right here. So with this, we are still within the context of this rising channel resistance right here, still respecting it very, very lovingly actually. And we have a nice support trend line right here, kind of forming this what would look like a bear flag. So again, as long as we're within the boundaries of this area right here, I will kind of look at this as a bear flag formation. Doesn't mean that we can't negate it. And of course, you know, I always want to talk about the limitations of technical analysis. And this idea would be null and void if we did indeed close a daily, you know, above this trend line right here, which is rising over time. So while it was around 74.80 last night, 7,500-ish area, you know, you can imagine that if we do, if we extend it out a few days, it's going to start to really get into the, you know, 75, 7,600 area. So, right. All right. Anyways, with yesterday's daily close kind of poking its wick up above here and then completely rejecting downwards with that nice follow through to the downside, to me that's indicative of institutional order flow and liquidity pool dynamics being hunted out essentially. We can see this very easily on the lower time frames right here. This is your hourly. You can see this major wick pointing all the way up here. And I was actually watching this on the minute chart, the nice little movie mode chart. During the time of that happening, and essentially it was about 3 minutes of pumping for about 200 to 300 bucks, all the way from about 7,500 to 7,700, and then right after that, it was just down central. Which essentially, if you were watching, if you were watching your Twitters, you know, going off of the BitMEX wrecked and all the whale calls and all that kind of stuff, like I was, you likely saw that there was a lot of market buying leading up into this area, liquidating, getting a few big liquidations above this 7,600 area right here, and then straight down after that with market selling just forcing it back down. This to me again is very indicative of institutional order flow, where big institutions who need to get filled on their massive orders, you know, think like $500 to $1 billion, or sorry, $500 to $1 billion, no, $500 million and up. They really need to, you know, create and engineer liquidity for themselves. And how do they do that? Well, they kind of they make everyone from Reddit think that we're going to break out because everyone's been looking at this area right here. But again, this is why confirmation is so damn important. So again, with the fall through to the downside right here with this nice, thick, red, solid, tight candlestick, that to me is a very clear signal that someone was just trying to get filled on their shorts above here. So again, putting this all into context of this formation that has essentially not been broken, you know, just yet, and did have a kind of a chance yesterday, this bear flag formation I'm speaking on, I want to keep on treating it as such. And this to me creates a very interesting dynamic because the historical relevance of this is reminiscent of a major bull trap that we had in a very similar market cycle in 2014. So first things first, in order to do a complete analysis on this, I want to go over the full-on market cycles that we've been kind of living through for the last 3 or 4 years or whatever it might be. So I want to pull this all the way out. When in doubt, pull it out. It doesn't work for just some things, but it works for charting as well. Anyways, starting over here, let's talk about what we've done to kind of you know, play out this market cycle. So you have your bull phase. You have your bull phase where essentially, you know, you're rallying for about 3 years straight, all the way from late 2015 to 2018. This is the phase where, you know, buy the dip is great, hodl is great, or I mean, it's okay, I suppose. But essentially, the big point here is that we're just in a general uptrend. Now, yes, you do have these aggressive down movements, you know, along the way, but as you can see, you never even get close to breaking this purple 200 exponential right here. So you never get what's called a change behavior. It's not until this area right here where we actually top out and have a reversal formation in place where we can say, Okay, we have a change behavior, so we are moving on to the next phase. So bull phase here to recap, and then reversal phase right here. All right, so after reversal phase, which is essentially marked by by all this high volume, essentially distribution-ish characteristics going on around here, we go into what's known as consolidation. You go to kind of reiterate, you go through your bull phase, your reversal phase, then you have to consolidate to figure out, okay, are we going to go up or down from here? And we consolidate between this area right here. Let me just put on my trend lines. As you can see, this is our nice resistance trend line. And then where's our consolidation trend line? Well, if we go all the way over here, you can see very easily that it's something like this. Something like this. If we extend it out, something like that would look right, quote unquote, right to me. And I'm going to highlight it with the nice green triangle of perhaps prosperity or perhaps death and decay, depending upon your positions over here. So again, when you're in a consolidation phase like this for 4 to 5 months, technically speaking, you can break it out. You have equal chance to break it out, to the top side, to the bottom side, right? However, if you were looking at this and if you were following these streams, you kind of did know that we had a lot of signs of distribution going on right here and right here on this low volume kind of rounded off topping action, which was very indicative that we were going to, resolve this consolidation to the downside. Not only do we have that to kind of guide us through this area right here, but also we have this very orderly drop-off in volume, which is also indicative of consolidation. So again, I'm really liking how these charts are painting themselves and making it, I don't want to say very clear, because that's maybe that's a wrong term to use. It's a little bit arrogant as well, but again, we want to have this nice flow of ideas here. Again, your bull phase, your reversal phase, now your consolidation phase. So when we resolve this consolidation phase to the downside, as marked by this big fat red candlestick poking below your consolidation area right here on heavy volume after a few months of very, 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 very low volume, that to me tells me that there's participation, there's confluence, and there's agreement within this market to play out some downside, a more prolonged downtrend, so to say. And we have that. I'm going to take this trend line off right here. And we have that kind of confirmed as we do just, volume kind of starts to pour in onto the downside over here. And again, this area right here, the bottom of your consolidation phase is coming in right around this major resistance here. That's kind of what I look at as the ceiling for this for what is a more prolonged bearish trend. So as long as we're living below this, we have no change behavior is the big point to make. And no change behavior means, well, the former behavior just, it keeps on keeping on, essentially. So again, as long as we're living below this area right here, I do look at this as quote unquote bearish. And with a clear rejection right at this level, that to me is very indicative that bears are ever present and waiting around with their big fat red candlesticks to shove down the price action. So again, with yesterday night's daily close, like in the way that I did, and in this nice bearish engulfing, in this massive bearish engulfing, and just the way that actually formulated on the very low time frames, to me showed me that bears were just kind of stepping aside as bulls, got their nice exit bump perhaps, and then kind of got their fills above here again. If you're thinking about institutions that have, or just anyone with super deep pockets, that has hundreds of millions, maybe even $1 billion, they're going to need to really be creative with the way that they engineer liquidity for themselves. Again, just think about it for yourself. If you're on BitMEX, for example, and you enter in just even $1 million, a million contracts at market, you're going to move the price. In some cases, 10 to 20 bucks. By the same token, just multiply that by, 100, 500 maybe. So again, you really have to, kind of engineer that false breakout and then force price action right down. And it's by I believe it's by no error that you have this, if we put it on the hourly right here, that you close this hourly right at the last second, right below that major resistance, again, coming in right around here. We'll call it 7,500. Yes, it's actually a hair below. But the way that I look at this is that this to me is just characteristics of distribution and perhaps even just a bull trap, liquidity hunt above there. All right, so let's talk about because this idea has still not been negated. What does this mean for the overall markets? Because this is really important because by not negating this resistance trend line right here, we still are in the formation of a bear flag. And if we have a bear flag, then we can make a measure move off of it. And if we do that, I'm gonna take my measure move and apply it. And again, I'm making the assumption here. There's a major assumption being made that one, we do not break out the top of this resistance right here. If we do that, then this idea is null and void. It's no longer valid. By the same token, it's not even complete, so to say, until we start closing dailies below this blue box territory right here, which is coming in at a rising angle somewhere between 62.50-ish and about 63.50-ish. Again, it's rising over time. So this measure move, if, again, making the assumption here, major assumption being made that we do carry it onto the downside, would be taking us down to this level right here. Nicely fit into this blue box territory down here, which again is this nice horizontal level right here coming from this price action going on in late August to early September, where a lot of business was being done. So again, a nice historical relevant area. What else do we have pointing towards there? Because again, I'm always looking for confluence on these ideas. You want multiple things pointing towards them. That just adds confidence. Well, if we look over here, what is this? We have a nice big rounded off distribution-ish area going on right here on low volume. And what does that tell us? Well, it looks to me like it's a damn cup, inverted cup and handle, as we do have a nice handle being put in right here. And again, that is also very confluent with why this resistance trend line right here at around 7,500 is so damn important. As long as we're living below there, not only is this bear flag valid, but also this inverted cup and handle is also valid as well. So with that said, we can make a measure move off this as well, and we just take the handle to the bottom of the cup and apply that to our breakdown area, which has been confirmed. And look at that, it's taking us right into this blue box area as well. What else do we have pointing towards there? Well, I'm glad you asked. So if we pull this out to the right-hand side over here, I've taken a Fibonacci retracement from the ultimate high to the ultimate low of the 2014 market cycle, and that 786 Fibonacci retracement is coming in right in here around that 4,400 region. Now, again, when we're talking about these long-term ideas, it's not like it's not one of those things where I'm saying it's like going down there to the fucking dollar, so to say. And excuse my French, but no. Of course, come on, we can fucking swear here. But what I am saying is that it's giving us a nice area, like a pocket, and when we're looking at this over time, do you need to be perfect to the dollar? No, absolutely not. So I don't want to represent this idea as if it was like it's going there to this dollar exactly. No, it might be like a couple $100 range, to be quite clear. All right, so what else do we have pointing towards there? Well, if we go over here to Bitstamp, which is the longest running Bitcoin exchange, having data going all the way back to almost the Genesis block. Not quite, as no exchange does indeed have that, but Bitstamp is the best one that we got. If we put it on the weekly time frame and put it on the logarithmic scale over here, then we can see that this dotted line has been valid pretty much ever since the inception of Stamp, and it's never been broken. It's never been broken in the almost 10-year history of Bitcoin. So it's very, 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 very relevant from a historical standpoint. And anytime that Bitcoin has ever touched this dotted trend line down here, it has never gone lower. So again, from a historical standpoint, it's got great history. I like it. Statistically speaking, it's typically going to be, or over time, it's typically been a good do, so to say. And where would this dotted trend line be coming around if we did kind of, again, make a little bit more of a, what's it called, a forwards-looking trend line over here? Well, it would be intersecting this area right here around that 4,400 to 4,500 region once again. But what is the validity of this? Well, if you look over here in 2014, a very similar market cycle, you can see that this logarithmic trend line that we initially were kind of being held by in this initial consolidation phase right here, which again, measured it out, it's very, very similar, and that's why, I believe that these market cycles have a lot of, carryover with each other. Again, when we're talking about Bitcoin and charting Bitcoin, we're not necessarily charting Bitcoin. What we're charting is human emotions and human, exuberant irrationality, fear of missing out, greed, and all these sorts of things, and also fear, uncertainty, doubt, because these sorts of things do, seem to play out very similarly over time. Again, across all trading assets I've ever, looked at in my life. Again, coming from the realm of equity options, also commodities, forex, and obviously Magic Internet Money as well. These sorts of human emotions do have carryover between all of them. So again, this is why I'm such a heavy believer in market cycles in general, and why I want to analyze them over time. So we can see in 2014 a very similar market cycle where we did have a very similar drawdown in this first period right here. This logarithmic trend line taking us all the way down. We can see that we kind of based off of it and eventually found our ultimate lows off of it as well. So where would that be coming around as well? Well, you can see right here, it's on that intersection of your dotted trend line and also your horizontal area right here, and this whole area going on right there. Again, nice confluence with that area. What else do we have? Well, we have this purple 200 exponential. It's going to start to likely come up around this region as well. Again, it doesn't need to be perfect, but it's right there in the area, and that's good enough for me. Okay, what else can we talk about? Let's go back on over to our FinX chart over here, and I'm going to go into the lower time frames, actually, I'm going to go back to the daily, and I want to talk about this. I want to talk about the exponential moving averages going on right here on your daily chart. And this is what I'm probably most comfortable using in technical analysis in general, as it's, I've spent the most time learning this sort of stuff. And again, where I come from a background in trading and making markets in equity options on, New York Stock Exchange, ARCA, and Chicago Board of Options Exchange, the people that I learned from and the people that, who were doing it for 20, 30, and in one case, 40 years, this is what they use, and this is what they taught me. So this is what I'm most comfortable with using. And this is what I'm going to talk about right now, so to say. All right, so this cyan line right here is your 100 exponential, and that purple line is your 200 exponential. And your cyan line has crossed to the downside of your purple line. All right, fair enough. What's the validity of this? Well, the validity of this is that a lot of bots and a lot of the algorithms are just kind of programmed to respect these sorts of things just based off their nature. Statistically speaking, just they look at this sort of thing and they say, oh, okay, we're going to turn on the sell programs. Just similarly to how you had your death cross happen over here with your green 55 exponential cross of the downside of your purple 200 exponential right there. Again, it's not necessarily any sort of like magical, mystical adventure. It's more telling of what the bots and algorithms are programmed to do. And so I'm sure everyone's familiar with your death cross over here producing this sort of price action. Again, this is your perfect death cross where it's being like sucked into the price action, then spit back out, just rejecting it, confirming that the bots are on the sell side of this price action. Well, you'd imagine that when the 100 crosses the downside of the 200, that's going to just intensify the pressure a little bit more. So with that said, I want to kind of describe the price action here, and then just put this in your mind's eye. Just remember this for a little bit here. All right, so you have the cross happen right here. Then you have a nice dump in price action, consolidate, and then pump back up to your yellow 21, dump back down a little bit lower, pump back up above your yellow 21, reach for that green 55 exponential, then dump back down below your 21, then pump to your cyan 100 exponential right there. Okay. All right, so why am I even talking about this? Well, again, in a historical sense, let's go over the why this is even relevant. And to do that, we're going to go all the way back on over here to Bitstamp and go back into the 2014 scenario, because this is the only other time that we've ever had this exponential moving average cross ever happen in Bitcoin's almost 10-year history. Again, right here in 2014 on September 11th, actually. Or sorry, maybe it's 10th. Yeah, right there. Or September 9th, maybe. Something like that. Anyways, again, my date's all wrong over here. Anyways, so again, just to reiterate, this is the only other time that has ever happened in Bitcoin's almost 10-year history, ever. And we have very similar price action. Again, we have a dump from your yellow 21, consolidate, pump back up, and test your 21, reject from it, dump back down, more lower here, to use a good English term, but a little bit more aggressively low right here. Then pump back up above your yellow 21, reach for the green 55, dump back down below your yellow 21, find that secondary local low right around your candlestick body right here, and then pump back up above your cyan 100 exponential right here, reach for your purple 200 exponential, and then, well, you can see how this plays out to go onwards in that price action. Also, we have a very interesting formation going on here as well. If you remember, we do have what looks to me to be like some sort of a rising channel bear flag formation going on in 2018, and we had a very similar formation going on in 2014. What else do we have? Well, if we go to the 12-hour over here, let me just take this off over here. But I'm going to scroll back on over here. Damn it, TradingView, just make this easy for me. All right, so back on over here, and you can see this topping action right here. Well, if I put on my titty sequential, you can see that we actually top on a 9, on a perfect 9. This is your perfect 9 with the high of your 9 trades above the high of your green 7, and same thing with your 8 and your 6. So if we scroll on over to 2018, well, look at that. What do we top out on? A green 9 right there. Now, yes, we did kind of have some more price action play out, but again, that's why historical analysis is not like a one-to-one thing. You can't just say it happened like to this price level exactly in this way during that time, so it should happen this way as well in 2018. No, that's not the right way to be doing it. I don't want to represent it as such. That's the wrong way to do it. However, there's great confluence with the way that these things, with the way that the big indicators work out, and especially the exponentials as well. Also, again, you do have this nice, going back on over here to Finex, you do have this nice, let me just take this off as well. Again, this bear flag formation right here. Okay, what else do we have? Well, if we look at the underlying market dynamics, we can see that the longs are actually below that critical mass of 33,000 longs open, which is historically relevant for Bitcoin, right? Because anytime we've gone to this 33,000 level of longs or higher, it's correlated with major dumps. I've actually gone through each one of these peaks, this one, 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 and now perhaps this one, and all of them that have played out so far, not necessarily these ones, have equated to major dumpages in price action, except for one. It was actually this one right here, to be quite clear. Again, I want to be as thorough as possible. And this one did not. This one actually pumped up the price, but it eventually did lead to some distribution, and we actually did dump pretty damn hard after that as well. So again, it's not until we actually go back below that 33,000 level where the dumpages really start happening. You can see right here we have actually just ticked below 33,000 longs with yesterday's daily close on Finex. So again, also kind of suggestive of perhaps distribution as well. What about the shorts? Shorts are in that 20,000 area right here, which again, if we look at the critical mass area coming in right around here, around 30,000, we are nowhere near it. So again, I don't want to make it sound like you can make formations on these charts at all. I know I have trend lines in here. I've been seeing some people kind of parrot those things around like you can make a cup and handle on a short chart. No, that's completely the wrong way to be looking at this. However, I do want to know where the critical mass is, and that's about 30,000 shorts. So we're nowhere near it. So what does that tell me? It tells me that bears have plenty of ammo to pile on if they want to. Okay, so what else do we have in this market that's kind of interesting to look at? Well, if we go over here to Ethereum, Mr. Buterin, we can see that Mr. Buterin is one of the higher market cap coins within this market, right? I mean, I think the data suggests that, right? And so the way that I look at it is the same way that I look at a major indice in traditional markets. Like you have your SPYs, your Indus, your NYs, all this kind of stuff. Well, those are like the generals, and I look at Ethereum like a general, kind of in the same way that Bitcoin is. Like they lead the market, kind of they take turns sometimes. Bitcoin's obviously top dog, but sometimes you have seen Ethereum lead the charge. Same thing with Litecoin. And it's been a very, 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 very concerning that your top altcoins like Litecoin and like Ethereum, like Mr. Buterin over here, have not been joining in and have not been benefiting from Bitcoin's major rally from the past half week. Again, instead, Ethereum had a clear rejection on your 55, that green line right there, kind of filling in this nice bear flag formation, finding support this morning right around here, around your 440 level. So again, if Ethereum does indeed break this support right here, which is kind of just getting a nice little bounce off at the current moment in time, but again, if it does break this 440 support right here, this will look like a confirmation of a broken bear flag to the downside, and the next big support that I see is not until about 375-ish area, and really at that point in time, I mean, you have to really be thinking, okay, well, I mean, you might be coming all the way back down here, 300, maybe even below there is 150. I mean, I don't want to be talking this far in advance. We don't quite know, but you have to be wondering, okay, if Bitcoin really does play out this 4,400 scenario, where does that lead Ethereum to, right? So with that said, that is quite concerning. Litecoin looks extremely similar as well, as Litecoin is just, it doesn't, well, I guess it didn't go as relatively low as Mr. Buterin, but again, same sort of thing here. It's in some sort of a rising channel bear flag formation, and just kind of painting it in with a nice big rejection right here, again, off of your 55 exponential. So this is quite concerning. I'm sure people are saying, Crown, what the fuck you talking about, man? We've seen this before where Bitcoin pumps and altcoins dump. Well, you're right. We did see altcoins dump in I'm guessing people are saying that in reference to this area right here in September, October, November, and December when Bitcoin was just going moon mode the whole way through. Well, that's true. That is very true. The altcoins were dumping in their Satoshi value, but they were actually going up in their U.S. dollar valuation. It's just not as fast. And in fact, you can just confirm this yourselves with me. I mean, don't listen to me. Just verify this yourselves. Let's see right here from October to essentially December was when they were dumping in their Satoshi value. So I'm going to go over here back to Ethereum. So let's kind of where was this exactly? Yeah, so right over here, you can see that we are dumping all the way through here. But if you go to the dollar valuation, you can see that September to December, Ethereum was actually going up in dollar valuation. It just was not keeping pace with Bitcoin because, well, I mean, how can you when it's rallying $500 to $1,000 a day? So again, we actually have bifurcation in this market right now because we're not just seeing Bitcoin or what was happening earlier this week with Bitcoin going up a little bit and then altcoins dumping in their Satoshi value. We were also seeing them go down in their dollar valuation as well. So this is another, bifurcation of behavior and telling us that the soldiers are not following the generals. And when you don't have the soldiers following the generals, well, you can't fight a fucking war, can you? And the bears are all stacked up right now, it seems to me. So again, that's kind of what I'm looking at over here. I'm probably going to end this video right there. Again, this idea is in play as long as we're respecting this area right here as resistance. It is rising over time. So if we do, kind of take another stab at this upper resistance trend line, it'd be coming around here, 7,500, then 7,600 is rising over time. Same thing with your support over here. So again, as long as we're respecting this area as resistance, I do look at this as perhaps that big bull trap of 2014 being put in place in 2018. Again, very similar dynamics that we're having and seeing in our in all of our indicators. Also, I just want to talk about this as well. Just really quickly, speaking of our oscillators and indicators over here, I'm going to bring up our RSI, and this is one of the big reasons why I do believe that we're in a more prolonged bearish market. And if you look over here, you can see that a lot of people talk about 2013, and they say, "Hey, Crown, we went down in 2013, but we eventually went up in lunar." Well, yeah, you're right, we did. But look at your RSI. You never even got into the bearish zone in your RSI. The only time Bitcoin's ever been in your bearish zone in RSI, except for this area right here, which doesn't really count because it's just too early in the history. You just don't have enough information just yet. But the only time that you really went bearish in your RSI was in 2014. Well, in 2018, we have actually gone below the bearish control zone once again, as we are hanging out right below, or actually kind of right above it right now. But your bearish zone is traditionally around 45, on your RSI, and your neutral zone is about 50, right? So we're hanging out between the bearish and the neutral. And the way that I look at this is that as long as we're below the neutral in the neutral zone in the RSI, this I still lean to the bearish side from a weekly time frame. What else can we talk about? I know that there is something else in my mind. If I probably just talk around in a few more circles, maybe we can get to it. What else? I'm back over here on Finex. There's got to be one other thing. I know that there is. Maybe I'm forgetting it right now. What could we? I know that this analysis is not quite complete just yet. Okay, well, let's just talk about a few trade ideas in the more immediate future. As again, I won't be on live stream today as I'm going on a little day trip. The way that I look at this is that if we did come back up here and pop to like 7450 or 7500-ish area, I'd actually be looking for a short around there with a stop loss somewhere right around this area right here. Because again, that is kind of like the major area of taking out this perhaps bear flag formation, which would lead to that kind of cascade of effects, so to say. I should also say this: we have severe divergences, bearish divergence on your RSI over here. So again, at the very least, we're in a way, I don't want to say due, that's the wrong word to use, but it's looking like it's just very likely that we just kind of consolidate lower and not again it could be the fact that we do break it onwards and upwards from right here. That's very, very possible. Now I remember what I was wanting to look at. All right, so our big time frames over here. Again, I come from the equity options world, and in that world, bigger time frames are really what rule the world. For some reason in cryptocurrency, people just don't pay too much attention to it. But if we put on the monthly over here, you can see just from the most basic way of looking at candlestick formations, you can see that you can see that we never, even though we have had a nice rally this month on extremely low volume, it has never even gotten close to really doing anything. We've just printed an inside candlestick, so to say, over here in my best chart guys impression. We got an inside candlestick right over here, guys. But you know, until you actually break the high or the low of this former one in just the most basic charting sense, you really haven't done anything. And especially when this is on lower volume, I look at this as just consolidation, just, you know, kind of fucking around in this range right here. And while we have had a nice move, you know, our human brains have a difficult time interpreting this sort of thing, because you know, we see this as like a $1,500 move, and we're like, holy shit, the bottom's in, baby, it's time to go upwards and onwards. Well, not so fast. We haven't done anything from a more higher, you know, a higher level time frame. What else do we have to talk about? Oh, yes. Okay, so let's talk about a few other things. First things first, I want to point out the 3-day chart right here. You put in a very impressive shooting star dilly right here, so to say, on good enough volume. I mean, not super heavy volume, but good enough. And you've seen fall through so far. Now, yes, you do have your yellow 21 exponential coming in right around here, around 70.69. Great number. But let's also talk about why this is probably not why this is probably not a bottom right here. So if you look over here, this whole rally was sparked off by this green dilly right here on 629. And you can see that the volume on this dilly, while it was above your volume moving average, it wasn't significant, so to say. And especially in the context of these dump dillies over here. Sorry, my language is so funny. But again, you know, it's one of those things, like if I'm looking for a full-on market reversal, I want to be seeing it put on like capitulation style volume, perhaps something like this. And, you know, maybe if we were to turn around here, you know, we could look at this and say, well, maybe you have capitulation here. But again, when you do make new lows beyond this low right here, it's just, it doesn't look good. It's not your traditional, like, it's not your traditional picture perfect signal. Not that it needs to be, don't get me wrong, it doesn't need to be, but when we're, you know, looking at a major market cycle, I would really like to see that. So again, down over here, the way that I look at this is that this kind of spark off over here is very unconvincing, so to say. Now, we can also check on the underlying market dynamics because, again, I want to follow up why this is unlikely to be a good bottoming dilly over here. And again, this is on June 29th, and we can go look at what happened on June 29th. So let's go on over here to our shorts chart. And on June 29th, we had this right here. And essentially, we have a major, basically, shorts closing because, again, we had a very nice down movement. How you doing, Elsa? She's looking at me weird. And essentially, you know, is shorts closing. So again, is that how you want your market shifting, market cycle changing behavior to be sparked off by? Well, no, that's not real buying, so to say. I mean, yes, you know, they are buying. You know, it's shorts closing. They're buying back in, or maybe some of them are getting liquidated along the way as well. Very possible, no doubt about that. However. In my experience, that's not really the way that you want to see your full-on market shifting, you know, moon mode type behavior change occur. I want to see it sparked off by legitimate buying, and we just did not have that actually. We actually saw longs go down during that time. So again, I think that covers just about everything I want to talk about. Again, you know, these are just ideas. I want to be very clear with the limitations of them. And again, your big triggers for this idea either being confirmed or denied is, you know, denial would be a daily close above this, you know, 75, 50-ish area right here, just wherever this rising trend line kind of, comes into. If we close it daily above there, you know, then you don't have the bear flag anymore. You don't have the inverted cup and handle anymore. So those, you know, I can't really think about, I don't have a way forwards after that. But by the same token, it's not until we break this blue box territory down here that we actually say, okay, we now have confirmation on that, and that's really the best way that I have to look at it. So again, those are the two big triggers that I'm looking at right now. Until we actually you know, confirm one way or the other, we're just going to be hanging out and playing rope-a-dope along these major supports and major resistances. This is what we kind of talked about, you know, going on down here is like, you know, while it does look bearish, you know, you really don't want to be pounding on the shorts down around here just because you can play rope-a-dope from right here and go all the way up here. Now, we did talk about this. I never want to sound like Mr. Arrogant saying, I told you it was going to happen, but it's, you know, it's just one of those things. It's like, this is why I'm always saying, you know, wait for confirmation. It's not over till it's over. And this is kind of how those traps get put in place because they look damn good, but until it's actually confirmed, it could be Trap City. So again, that's gonna do it for today's stream. I hope everyone has a beautiful rest of your Saturday. I'll be back on tomorrow, Sunday. I'm excited for that. Until then, guys, have a great weekend, and I look forward to seeing you soon. Take care.